Hello, Rob.
Mr. Piles.
All right, trying to improve my lighting today a little bit.
Oh, nice.
Not much, but nice.
Well, this is a podcast after all, you know.
That's right.
What do
That's
people want? Hey,
hmm
I don't like Skype on the Mac. I just wanted to say that.
okay.
It,
Well,
I can never
I,
tell who's online. I don't know. People say they sent me a contact request. They might as well have sent me a letter.
in a bottle in the ocean,
Do you
right?
receive do you receive regular mail still?
Yeah. Do you mean like listener feedback,
No,
or
just like
or
just like mail at your house.
oh, yeah. We get the Netflix by disc plan, and
Oh,
then we
okay.
usually get like ads, junk mail.
Because I don't even know how to open my mailbox. There's a key. Actually, let me rephrase that. I don't know where my mailbox is.
Oh my goodness.
So I have a mailbox in California. It's at a UPS store. And
Okay.
I don't know where the key for that is. They just go get my mail when I go there. And then I have a mailbox at the UPS store down the street from here. And I don't know where the key for that is either. And they have to open that for me as well. So
Wow.
yeah, don't send me any mail, listeners. But we do get what we call now in the modern age regular email as opposed
Right.
to irregular email. I don't know what that is. What is?
Right.
Recently, we got a regular email from a friend of ours who mentioned, Jason, something about the PFG settlement. What's the news with that?
Yeah, well, I'm glad you asked because I was actually I was going to ask you what it meant. He says he sent us this information here, but let me just read what he says about it, okay? Because I'm sure you can make better sense of the information than I can. But this is from Javier, and he says, "Hello guys, I just forwarded you an email from PFG Best. They want to settle for 30%. I was shocked since all my research I had done said I would probably get 10% or less. I don't know if Rob could take some time and comment about this. How likely are we to receive 30 cents on the dollar?"
All right. So PFG Best was a Forex and futures broker located in Cedar Rapids, Iowa, and also had an office in Chicago. But their big office was in Cedar Rapids. They were run by, can't remember his name, who was later found out to have siphoned off money that account holders had held in their accounts and started restaurants and traveled and lived somewhat extravagantly on that money. And he was caught, he was imprisoned, and we all thought, well, all the money's gone and no one's ever getting any money back. So Javier is specifically referring, Jason, I think, to the fact that he had sort of given up hope of ever getting any money back in the settlement. And the good news is, the good news part of the bad news is that he's going to get 30% back. And that's pretty amazing considering that we all suspected that there wouldn't be any money left over after creditors were paid off. So, Javier, we're happy to hear that. We're sorry that you were bilked of that money. We're sorry for any of our listeners out there who lost money with that broker. They really build themselves as an honest alternative. A lot of people lost their jobs, and a lot of people lost their trading accounts and didn't have and have not had access to it for quite some time. Farmers lost access to their trading accounts that they used to hedge for crop purchases. It was truly a traumatic experience, and we're happy to hear that some money is going back to the traders who had accounts, and we're sorry that it ever happened in the first place. Not that we
Now,
did it, not that we had anything to do with it.
right,
I
that's
mean, if I
true.
had anything to do with it, I would not be doing this podcast right now.
That's right. You probably wouldn't be sitting there.
I would
But
be doing a podcast from jail. I would be doing the Jailmates podcasts.
now, one other
You
thing
have to
about how
be at one with your cellmate. I have rules in place to protect myself in the cafeteria.
yeah, exactly. Oh my goodness.
Whatever
Um,
happened to I have rules in place to protect myself from? Can we have that back?
yeah, yeah. I actually miss hearing that in the
Can
intro.
we just throw that in the middle of the podcast randomly from time to time?
I absolutely think we should. We'll do that. Um,
Protect myself.
so one more thing about Javier here, and Rob, I think that I mean I hate this. I hate to hear this as well,
Yeah.
but we got to
Right.
recognize this. He says, I did take 2 hours to leave an iTunes review and almost quit after 30 minutes. But like my wife says, I'm just stubborn, but I tell her I'm persistent. So that is
Wow.
super nice that
Wow.
he did that.
I am absolutely shocked and thrilled at that. Thank you, Javier, for leaving that review, and please know how much we appreciate that, and that means a lot to us, Jason. This is what we do, and that's really kind of him. Thank you.
Yeah, it is. Now, we do have a trading question here from a guy named Davey, and I love that name because that's my son's name. So he says, "Hello, Rob. This is Dave of Columbus, Ohio. I have a couple of questions about putting together an automated trading system. Here's my question. Let's say you've created a system that consistently produces a 5% monthly return. As you're aware, market behavior can change over time, and very optimized systems that are profitable can become unprofitable over time. So, his first question, Rob, is how do you deal with this problem besides having a portfolio of multiple robots? And he's got more, but I didn't know if you wanted to take that one first.
Well, let's just stick with that one today, and then we can get to our conversation that we've been really looking forward to. Dave,
Okay.
you don't know what you don't know. As Donald Rumsfeld famously said, there are known unknowns and unknown knowns. And we know some of what we don't know, and we can't know a lot of what we do know, or something like that. You just can't know, Dave. You can't even know if you run a portfolio of strategies if you are diversified. And the big joke about diversification is you never know what's going to be correlated, so you never know really what's going to be diversified. And for years and years and years now in my adult life, I have seen financial markets that were previously uncorrelated become coupled, and then markets that had previously been correlated become uncoupled. And then I saw Chris Martin and Gwyneth Paltrow become consciously uncoupled, and I thought, well, now all trading strategies are have gone just in the toilet. So what I've got now, Jason, is I keep this right near my desk. This, for those of you watching the video version of the podcast, this is a Play School cash register. And what I'll do is I'll just add up the collective profits from all the robots that I'm running and then subtract from that calculation infinity. And then I can come up with a pretty good estimate of what that robot collection will make over time. I think that, Dave, you are concentrated on too much on being afraid of what you don't know that can go wrong rather than the evidence for what you do know that could go right. And what you should be doing right now is running your robot. And then if your robot begins to have a win percentage that is 20 to 30% lower than usual, so if it has a 70% win percentage usually and it ends up with a 50% win percentage going over the course of the first month or two, then you know that something's wrong with your robot. Or if the size of the winners or the size of the losers changes dramatically, more than 30 to 40%, then you know that your robot is broken. But stop chasing after the false goal of diversity. It doesn't exist. And as soon as you think that you're diversified, then you're not diversified. And then because you're not diversified, you're just going to be sad that you weren't making money from the robot that you did know worked, not the robot that you didn't know didn't work. I don't remember what I just said. I want to say one more thing about the news before we get to our conversation, Jason.
Okay.
Are you familiar with the Twitter?
Oh, yes. I love the
Yes.
Twitter.
My mom asks me on a regular basis if I've been using the Twitter. Twitter is struggling to convince Wall Street, says the New York Times, that it is still a company with plenty of potential to grow. It reported earnings just a couple of days ago, as of the time of this podcast. In its second earnings announcement as a public company, Twitter said on Monday that it had more than doubled revenues, beating its own forecasts and the expectations of investment analysts. But the social network's stock fell more than 11% in after-hours trading. Is Twitter, with its 255 million monthly users around the globe, Is it a sustainable company, Jason? Do you believe that Twitter will be a company that is around in 20 years?
Wow, will it be around? I think some incarnation of it will be around. I think that it will probably change a great deal from what we know now. But it will. And for example, maybe one reason for that is all these billboards and ads. I mean, now when you stroll down through your feed, you've got so many of these giant pictures that they allow to be in the feed, and I think that has really been problematic.
And
That's just
distracting.
my personal opinion. But I love Twitter, and I hate to see it go, but I think it's just going to change.
Well, I'm going to run some Twitter ads for my Trifecta 2 course that's on sale as of the time of doing this podcast right now. And I'm going to run some Twitter ads, Jason, and I'm going to come back on the podcast next time around, and I'm just going to share with everyone my impressions about how well that worked and what kind of results I got from it. And I'm really going to base my opinion on, listen, if the ads can work for me, even a little bit, then I think that Twitter is a sustainable company. If they can't work for me in a direct response marketing environment, then Twitter is really pitching its hopes on and in interruption-based brand creation advertising, where they sort of promote a brand, but they don't really get anybody to do anything. And I don't think in this modern age that if you can't get people to do something directly and immediately that translates into revenue for your advertisers, then you're on shaky ground. And I think one of the brilliant moves that Google made first, and everybody's trying to really figure out the way that they can do something similar, Google got a direct response model right on the web, and so they became the classified internet of the classified ads of the internet. And everybody else is kind of struggling to do something similar. And if there's one thing that I wish that Twitter would do, I wish that Twitter would integrate with a payment provider, store your payment information, so that in your Twitter feed, if you saw something that you liked, like a new album from your favorite artist,
Yeah.
or an iTunes download, right? Or a gift card for iTunes for a Twitter follower that's your friend that you want to send, you could just tweet a purchase order, or there could be a button inside the tweet and you would press it and they would have your payment information. And that immediate impulse buy type of thing, like if I followed Amazon and Amazon knew what I liked, and Amazon threw into my Twitter feed a new book by Michael Lewis and said, just pre-order it for your Kindle, click of a button. I didn't have to press anything. I didn't have to go outside of Twitter. If I could just do it from my phone as the Twitter stream, then I think that Twitter's got a business model that works. Otherwise, I don't think that Twitter has a business model that works, unless they do what I say.
I like that idea. That's brilliant.
Okay, so I don't know if it's brilliant, but I doubt that Twitter's going to be around in 20 years. I have my doubts about it. I just, how exciting can what we do on Twitter still be in 20 years?
I think it's exciting. I love it.
when we're all holograms and not leaving our homes in 20 years.
Yeah, that's true. Exactly.
Isn't there a movie about that where everybody's just a hologram? They send their hologram out for them.
Yeah. I think it's that Bruce Willis film, Surrogates.
Yeah, that's right. Man,
It's kind of like that.
You're good. You're good.
That's what I do, Rob. So speaking of entertainment like that, did you watch The American Office very much, Rob?
Yeah, all the time.
Okay, well, I was revisiting an old episode there where they go to Canada, and for those who don't know, Michael Scott is basically a buffoon. He's the leader of the office, and he goes to Canada, and I'd recommend it to people. But anyway, I was in the deleted scenes, Rob, and there's this a deleted scene about currency exchange that just cracked me up, and it made me think of you and all our listeners here. So if you guys don't mind, it's a pretty short clip. I just want to play this for you.
What is the heart of the Canadian economy? Money. And I am getting some. Thank you very much.
Hold on. Michael, how much money did you change?
$2,000, baby.
Oh, no. We're only there for one night. Look at the commission rate. And there's a handling fee.
Okay.
That's,
all right. Chill out. Quick fix. Excuse me. Change it back.
Yes. Get as much as you can. Strippers do not take credit cards.
Change it back.
Why are you still changing money? Michael, you don't need cash. You get a better rate on the credit card. You only need cash for the cab ride. Do you understand? I'll see you at the gate.
Change it back. Change it back. This is a smaller pile. That okay. Now I have $1,800.
It doesn't work as well as an audio clip, but still,
It's really good.
he just keeps changing back his currency back and forth as
At the
his
airport.
friends tell him different information, and he ends up like losing a couple $100 by the
Oh,
end.
that's really good. Did you know that speaking of traders that do well and traders that do poorly, like Michael Scott, I have this suspicion. I don't have the evidence to prove it, but I'm just going to make a claim that traders that listen to our podcast are 40 to 50% more profitable than traders in general. Did you know that?
Wow, I believe it.
I just made
honestly.
that up. And I said yesterday to somebody who asked me, they said, how many podcast listeners do you have? And I said 100,000. I don't really know.
Well, I know we're at the 500,000 mark over that for their downloads, so we'll see. We'll see where we go.
So it's pretty. We're not failing miserably at this.
Right.
You know what the heart and
absolutely.
soul of the American economy is?
Money.
Podcasting.
Yep. Yes. I love that.
Podcasting. Well, you've got a topic that I've been interested to get to. What is this topic?
Okay. Here's my very short preface here. One of the most important things I learned about driving, because I fancy myself a decent driver, but then I think everybody does, but is when you're driving, if you do something really rash or you try to do something fast, like hurry up and get in this other lane, like when there's desperation in what you're doing, that's when you do dumb things, and that's when you get in traffic accidents, right?
Right.
So that whole principle got me thinking about satisfied versus dissatisfied, grateful versus ambitious, because a lot of I don't know, you could say a lot of religions or a lot of self-help gurus will say, in order to be happy, you just need to be grateful for what you have. But honestly, it's like, well, where is the line, Rob? And I see this as applying to traders too, because we talk about making like consistent gains, consistent profits, and just keep going being happy. And those people are grateful or satisfied. But if you want to get really ambitious, if you're hungry and you want more, so that's really my question is, when is it complacent or lazy versus when are you ungrateful or impossible to please?
Well, tell me more about it. I think our listeners would enjoy hearing what you have to say about this.
Well, the only experience I have is my own life. And so I think about my own life and it's like, yeah, things are great. I really feel blessed in so many ways, but it's like, you always want more, but then you're like, well, let's see, should I want more? Should I just be thankful for what I have? Because supposedly that's the key to unhappiness, is always worrying about what you don't have. Whereas if you're thinking about what you do, then you're happy. So I think about traders and it's like, if they're just making, small gains consistently, it's like, well, shouldn't we be happy with that? But then other traders are like, yeah, but this guy over here, like, I think that's part of it. It's just like, if there's a possibility for more, then is it so bad to try to want more?
And where do you fall on the spectrum again?
Well, that's why I'm here visiting with you, Rob, because I think I'm kind of right in the middle there, because I'm like, yeah, I'm really blessed, but it's like, is it okay to want more? Is it okay to strive for more? So I'm kind of right there in that middle place, trying to figure out my attitude about it.
That is I would like, first, before we even go down this road, I kind of have this feeling that what you and I ought to do here is invite our listeners to chime in on this subject. How can someone who's listening to the podcast let us know where they fall on the spectrum and what they feel about what you've just said?
Okay, yeah, they could email us at producer@traderspodcast.com. And of course, they can always leave their comment in the show notes for this episode, which is episode 251.
What Jason described to me this morning in a text message was ambition and gratitude, satisfied versus dissatisfied. And I would add wanting more or being happy with what you already have. What do you think, podcast listener, about that subject. When we come back in our next episode, we're going to talk about my results on Twitter advertising, and we're going to follow up with your comments on this discussion. I'm Rob Booker. That's Jason Piles over there, or over there if you're watching the video, and you're listening to the Traders Podcast. Now, Jason, we don't often do this, but for a very short period of time, I do have this little trading course available for sale. Would you be completely offended? Do you think our listeners would be offended if I just told them about it for like 30 seconds?
No, it's fine. Go for it, Rob.
All right. The podcast is free, and we usually do things that are free, and we love you, dear listeners. From time to time, listeners ask me how I trade. I manage money, and I manage my own money and my family's money, and I've done it successfully for quite some time. And I do have a trading course that is for sale right now, but I've now priced things, Jason, so ridiculously so that everybody can get it and nobody gives me the business about being a self-promoter or greedy. So it's $27, Jason.
Nice.
And it's actually not on sale for the public any longer. It's actually off the market by the time this podcast is aired. But we'll put a link in the show notes and a link on the right-hand side of thetraderspodcast.com and a link below this YouTube video. And if you want to jump on board with that, it's $27, and it's actually the exact thing that I do when I manage hundreds of thousands and even millions of dollars. It's not any different, and it's not missing any components. And I only put it on sale for a little while, so I don't end up like constantly selling people stuff. But check it out. You can get a link on the side of the page on the Traders Podcast website. You can get a link at the bottom of the YouTube video, or you can, Jason, just look at the show notes on today's episode.